Who would have thought that the market is going that crazy when the fundamentals don't really look that good? Everything is going up. Bitcoin appreciated by 8%, Ethereum by 9%. Most altcoins are up. Yet geopolitics don't look great at all. The situation rather tends to escalate. But the common wisdom that the market doesn't like uncertainty seems to not prevail this time. When the invasion of Iran was announced, Bitcoin dropped by roughly 4%, but now it has more than overcompensated that drop. Have a look at the S&P 500 since the announcement. It barely moved. All of this additional risk, all of the potential problems we might face, yet asset markets don't care. Is the bear market over now? Let's have a look at the best moving averages. If you've been following this channel for a while, you know exactly what I mean. We should be betting on falling prices whenever we are below. We should be betting on rising prices whenever we are above. And we get very, very close to the 44-day simple moving average, the line here in orange. We haven't yet crossed that moving average, so this could be a potential resistance. But we've already overcome another resistance, which is this trading range here. Ethereum, for instance, already looks very bullish. This is Ethereum with its best moving average. We've already crossed that moving average. In other words, if we now close this day above the moving average, if we do not fall again over the next 3 to 4 hours, then we should be buying back into ETH. We've been betting on falling prices for Ethereum for a while, and we made money with that bet. But now things might be turning around. And this cross here, it's also in line with the very straightforward technical analysis, as in when we just look at prior bottoms and prior tops. Interestingly enough, those tops and those bottoms, they all align on those parallel lines. This is a relatively constant trading range, and we might have just bounced off the bottom of that trading range. If the market was not to suddenly crash over the next few hours, Ethereum has the potential to more than double from here. And why does that matter so much? It matters because it does have an impact on the altcoin market as well. Ethereum very much trades in line with the altcoin market. Have a look at this comparison. We can add total 3 ES. Now, total 3 ES is a measure of the altcoin market, excluding Bitcoin, excluding Ethereum, and also excluding the stablecoins. When we add that measure to the chart, have a look at how much they tend to move in the same direction at the same time. There is a very strong correlation, and that correlation is no coincidence. The two assets tend to move in the same direction because they are directly coupled. Many altcoins are coupled with Ethereum in liquidity pools. So actually, when Ethereum goes down by, say, 10% on a given day, and the altcoins, even without a single trade happening, also go down by 10% if they are coupled with ETH in the liquidity pool. So many altcoins are not priced in US dollars, they're actually priced in Ethereum through decentralized finance. That's why we see this connection. And that's why a turnaround in the Ethereum price is that significant for the altcoin market. Today, Bitcoin dominance is up. Ethereum dominance is up even more. Solana dominance is also doing fine, and the small altcoins, comparatively speaking, others' dominance is rather declining. And that's something we anticipated. The others' dominance is in a downward trend. It used to be relatively high on that trend, and now we see the sell-off. So the straightforward scenario from here is that Ethereum turns around and that the altcoins will underperform Ethereum. Yes, they might appreciate in US dollars, but they might not do as well as Ethereum. The question is always, what's going to be the narrative? Why will Ethereum go up? It's already going up by 9% in a single day without any narrative. And that's what I strongly believe. We don't need necessarily a narrative. Very often it's just the general psychology of the market and the recent trading ranges that drive price development. Yes, for major movements, a narrative is good. For example, here, the treasury company narrative. When more and more Ethereum gets bought by the Ethereum treasury companies, then of course Ethereum should go up. Unfortunately, the purchases through those companies tended to slow down. If we exclude the largest of the players, Tom Lee's Bitmine, and we just look at all of those other companies, unfortunately, the acquisition through those entities has already slowed down in September of last year. And that was one of the major reasons why Ethereum couldn't outperform anymore since beginning of September and of August. Here, have a look at Ethereum relative to Bitcoin. This was the nice treasury company run up. Ethereum outperformed Bitcoin by more than 100% from April last year to the end of August last year, but since then we tend to underperform, and maybe we are now finally stabilizing. Maybe Ethereum can finally break out even without a narrative, and maybe that will be temporary. Nobody knows. I simply like to use trading rules that historically worked very well in the past. And a break of that moving average is a positive sign. Every now and then we do get bad signals though. So if things don't play out as expected, we might end up buying high and then selling again low. That's just the name of the game. Historically though, that approach outperformed buying and holding a lot. If we just buy whenever we are above the 34-day SMA and we sell or bet on falling prices when we are below, we tend to do much better compared to just buying and holding. No trading approach is perfect. Every trading approach has its bad signals. It's all about the long term. Do we long term outperform? Of course, there's still risk in the market. This is Bitcoin with its long-term holder realized price. And in prior bear markets, we tended to fall below that cost basis. We're currently at 42.6K. That's quite a bit of risk given the current price levels. Have a look at the market value to realized value Z-score. So this is now measuring how much the long-term holder is currently in profit or in loss relative to the volatility. So relative to how much the price is going up and down. Is it very volatile or is it rather calm? And if we look at that, how much are we currently in profit relative to the price risk? We see that over time, the profit tends to decline, relatively speaking. So does also the unrealized loss, but it tends to decline in much less sharp than the unrealized profit. And if history is any indication, we tend to just bounce between the two extremes, and we should still head towards potential unrealized losses, heading towards potentially the 42K mark. So really, this is the risk that we currently face in the market. We might see a temporary turnaround in Ethereum and the altcoins, but the focus here is on a temporary turnaround, not necessarily a long-term change of cycles. Because we can very much argue that Ethereum can have its rallies when the general market isn't necessarily doing that great. We've had this in Q2 and Q3 of last year as well. I actually wanted to present this data in a live stream and also take some questions and answers. The problem is that the sound had an issue. The sound was cracking. I will start another live stream tomorrow morning again. So I changed a few settings on my computer. I hope this will resolve the situation. If you don't want to miss that live stream, then feel free to, of course, subscribe. And besides subscribing, you might also want to hit the notifications. A like would be very much appreciated as well. It will help the channel grow. See you in the live stream tomorrow at around 8 p.m., 9 p.m. UTC time zone. Thanks for watching and see you soon. Cheers.